Friends and enemies, welcome to yet another edition of the Canadian Bitcoiners podcast. I'm Len, and I'm going to be joined momentarily by Bob Burnett. Both of us were under the weather, so this is actually a wonderful time to come on board and gather around and maybe share some germs virtually since we're in different locations. But anyways, before we go any further, I just want to talk about the people that are sponsoring the show. It's making this all happen. So number one, we have Easy DNS. And in fact, I'm wearing a shirt, Easy DNS shirt. I love it. It's a great shirt. And if you want one, I would just reach out to them and see if they have any for sale. This is a fantastic shirt. So anyways, what they offer, obviously DNS services, right? It's in the name, Easy DNS, right? Okay. They also do email hosting. So if you have an email and you want to have it migrated, these guys will happily do it for you. They'll migrate your email over. So you don't have to have that @Gmail address. No. You can have something much more professional, or at least you appear to be professional by having an @specific domain name Gmail address. So you're rocking and rolling with that. Also with that, they also offer web hosting services. So you could have them host your website, and they do it for us. Our Canadian Bitcoiners website, it's live, it's ready, it's, just check it out. And it's all thanks to Easy DNS. They've held their hand through the whole process to get this where we are right now. They've been around since 1998, and it's a long time to be in this game. And many others have come and gone. Why? Well, because the service they provide was not as good as Easy DNS, and Easy DNS provides some really good service. That's why they're still around. They also accept Bitcoin. So how could you go wrong? So they're fast, reliable, they're privacy focused. Check them out if you want to have a website done, or you want to migrate a website over, or many of the other services they offer. Apply the code CBP Media, and you get 50% off your initial purchase. And the second sponsor, the last sponsor, definitely not least, but still, the last sponsor I'll be talking about right now, Bull Bitcoin. You can buy your Bitcoin, you can sell your Bitcoin with Bull Bitcoin. I wouldn't recommend selling your Bitcoin. Looks at the number go up, but that's not financial advice. Do your own research. You can pay your bills with Bitcoin thanks to Bull Bitcoin. You can also buy gift cards and spend it in the real world, whatever that may be, real world. I don't know. I'm sitting here in the basement and I envy all the people in the real world. Anyways, you can do this all with Bitcoin. You can live the dream of Satoshi. You can live off the Bitcoin standard. You could also buy, as I mentioned, on-chain, Lightning if you want, Liquid, a number of different options. Fees are spiking right now, if you check the mempool. And so it's a good time to look at alternatives out there. And Bull Bitcoin does offer that. Finally, they offer KYC free Bitcoin. Really, how could you go wrong? It's the cheapest in the game, easy to do, it's lowest spread. Just go to one of those Canada Post locations, 6,000 locations throughout Canada. There's more Canada Post locations than there are Tim Hortons. Think about that. And they'll take your dirty fiat and graciously give you KYC free Bitcoin in return. So don't be a no-coiner. Use our promo code below and sign up for an account with Bull Bitcoin. And that's it with the formalities. We could bring on the man of the hour, Bob Burnett. Bob.
All right. Hey, Len.
How are you, buddy?
I'm doing okay. We're going to slug through it because we get to talk about Bitcoin. So if you can't power through that, then you're not alive.
Yeah, we're a couple of hombres that are under the weather, so I'm not sure if people could tell by our voices. We're not 100%, but we're a couple of game seveners. Regardless if we're sick or anything, we're there. We're with nose to the grindstone. We're ready to rock and roll, and that's what we're doing right here. So, yeah, just it's been a couple of months. I think the last time you've been on our show was in September. So, has there been any update with Bob Burnett since then?
Well, got to travel a little bit, got to go to Pacific Bitcoin. That was a wonderful event. Got to see a lot of people there. We've continued at Barefoot to continue to expand our mining operations, got up a couple new horse class sites. If you remember me talking about that sort of stuff, we've got two new up, and we've got two new in process right now. So those are exciting times. I think as we may have touched on it before, forgive me if it's redundant, but now is the time to expand in mining. And ironically, it's been the time where people have been the most fearful. So, Warren Buffett, who I'm not a fan of, by the way, I mean, I guess I have to respect what he built, but I'm not a fan of maybe the way he approaches certain things. Certainly not a fan of how he looks at Bitcoin, but he does have a phrase I like, which is be fearful when others are greedy and greedy when others are fearful. And it does fit in the Bitcoin world. And whether you're building mining sites or probably stacking sats, whatever, that the best time are in the bear, right? When other people don't want to do it is probably the best time to do it. And so specifically in the mining area, we still have fairly suppressed prices on mining equipment.
Mhm.
But we have seen an uptick. I think we have seen the bottom, and we're starting to see some lift now. So we're actually placing an order this week, and we're paying a tiny bit more than we paid the last time, even though we're actually buying a much bigger amount. So that's just over the last like 4 weeks. So this price spike is starting to be felt.
So there's two factors right now that are really impacting those that want to continue to invest in Bitcoin mining equipment. And number one, we have the halving coming up, and that's expected to take place in April of 2024. So 5 months ish, 4 months from 5 months from now. So it's coming up. It's very, very close. And obviously that's going to have a huge impact for mining operations for their profitability. But the second is the price, and that's an external that we don't have any way to change that. But there seems to be something associated with that, and that's the ETF. And the approval of an ETF, or at least the talk of it's creating a whole bunch of buzz surrounding that. And the price of Bitcoin, I believe, is going up in the past little while, probably mostly due to that. So because we have the price going up, and it will probably continually go up, not financial advice, of course, do your own research, and we have the halving coming up, they seem to be two different and opposing ways of looking at it. Do you still think that mining companies are more willing to invest capital at a time where there's going to be potentially uncertainty moving forward?
I think what we've seen is some trepidation from the mining community. And I should say, I mean, there's private miners and there's public miners too, right? And there's a whole bunch of reasons why private miners and public miners are very different. We can dive into that at some point if you'd like. But one of the ways in which they're different is that private miners like myself, we either spend our own money. I'm not afraid to spend my own money, but frankly, I've spent most everything. We went all in, man. We, through this bear cycle, we expanded and we took pretty much everything we had on reserve and got it into new capital. And so what we've done, by the way, is we've expanded, but we've also replaced almost every server in our farm, across all our farms. So everything that will be running by the halving will be 1 year less in age, 1 year or less in age. So we're dealing with, relatively high efficiency stuff. Now, what we've had to do, though, is because we've deployed most of our internal capital, is we've had to go to outside investors and ask them to partner with us to expand further. That's where what I call the miner's trilemma comes in, where, these are generally high net worth people, maybe family offices, maybe funds. Like one of the things we announced last summer was a project we did with the Bitcoin Opportunity Fund, which is a great group of guys and true Bitcoiners. That's Larry Lepar, James Lavish, David Foley, Mark Moss, Greg Foss, Corey Klipstein. And so we did a project together with that group. But generally, these types of investors are really cautious. And I'll go back to that Buffett quote that we talked about before. When Bitcoin is roaring, all of a sudden, lots of people want to invest in mining. But it's probably not the best time. I mean, I'm quite confident when we enter this next bull cycle, God willing, right? When we enter the next bull cycle, there'll be a point in time at which the cost of, especially the servers, is going to inflate. And one of the things that we're going to have to do is have the discipline to say, no, the value proposition changed. Now we're going to have to ride the equipment we have and get the most out of it and wait for the conditions to return. But ironically, that will probably be at the exact same point that money is freely available to us. Like, so now we're out, we have to work hard. We have to find the right people. And so really the only people that, as we've worked, we have to find like real Bitcoiners, real believers, people that in the depths of a bear market have the courage to go forward. Now, the public guys are a little different. I think the game they've been playing, they haven't expanded a great deal. Most of them, up until recently, have been losing gobs of money, like lots of money. So if you go do the research, and there's a couple guys out there that that do some really cool work on like average cost of producing a Bitcoin through the mining process, right? And pretty much all the public miners were well north of $20,000 in cost of Bitcoin production, some of them over 30. So, and they were staring at a halving that must have been terrifying, right? They look at the halving, and it still probably is. So they might have cash reserves, or maybe they've even done share offerings or gotten some loans somehow, but they've often been somewhat reluctant to deploy because if they dip into the cash, like they may not be able to survive it. So they've kind of had this thing like, how long can they ride this out till the conditions get favorable, but also knowing they have to do the same thing that we did at Barefoot, which was you got to get your fleet replaced and you got to get the higher efficiency equipment in. Tough road. Some are better than others. A couple of them have honestly done a pretty good job of that. But there's some other ones, some fairly big ones that I know that haven't done a very good job. They haven't improved. And I'm not going to name names or call anything out. You can do your own research on that. But if Bitcoin's price doesn't recover further, it needs to go higher than this, then we have the potential of some big shakeups in the larger scale miners.
I suspect there's going to be a lot of consolidation moving forward, because there's going to be some that's probably going to sell off some of the fleet they have, or even just try to sell the whole kick a caboodle and try to be not merged, but gobbled up by another miner that has a much more healthy balance sheet. So, and I'm wondering too, another thing that's going to complicate things is the interest rate. And so borrowing now is much more costly than it was, say, 2 years ago. So it's going to be anybody, private or public, I think is going to be much more difficult position and less likely to go ahead and raise debt this way, just through simple borrowing of money, because it costs so much more. So sorry.
Oh, no, I cut you off.
You're talking. I guess you're going to talk about raising debt or raising.
Well, yeah. What I was going to basically say is, if you're a private guy like me, we've been in business since 2017, and I can say that we are profitable, and we've been profitable every single year. That said, I have yet to have a bank even return my call about a loan. They despise. I don't know if it's me, but I have a feeling it has to do with the business that they're in. I mean, we have a good relationship with. We do have a bank that supports us from the perspective of it's easy for us to open accounts and move money and like all those sort of things. I'm very grateful for the bank, Security National Bank in Iowa. Thank you. Because you support us, and not everybody does, right? Everybody in our industry does not have that blessing. That said, neither they nor any other bank I've ever talked to, when I bring up a loan, the kind ones will say, no, thank you, we're not ready. And most of them they hang up. Now, the big miners. So if we look at we use Core as an example, which was a train wreck. Did we talk about core last time?
No, we didn't. But it's a good case study. What happens when you borrow too much at a time when things are great, and when things don't go great and rates go up. And well, they unfortunately weren't able to bear with the higher cost of servicing the debt. But I'll pass it over to you if you want to talk more about them.
Yeah. Well, actually, let me make a general point, and then we can talk core, because it's a fascinating story. And by fascinating, I don't necessarily mean good. But so if you're a public company, though, and I'll use like Marathon as an example, you do have another tool available. Some of them have been able to get debt, because I guess as public companies, they have found at least some select financial institutions that will occasionally loan them money. Now, even in the last cycle, we'll go into core, that was expensive money, by the way. You were talking about 12, 13, 15, 16% kind of loans. But they also have the ability to do share issuances, right? So what Marathon's doing right now is they're issuing new shares. It's a dilution or inflation of the stock, inflating the stock, but they're going to raise $750 million through that mechanism. Now, personally, I think that that's part of what's wrong with public mining, is that I don't know if you, Len, but I guess for the sake of the audience, if you kind of dig the first layer into some of the economic theory around Bitcoin and also around kind of the faults of the fiat systems, one of the first things you run into is the Cantillon effect. And the basic principle of the Cantillon effect is that those closest to the money benefit most from the money, and those furthest from the money are from new money, and those furthest from it are harmed the most. Well, big public mining companies are kind of very high in that pecking order. And in my opinion, them exercising that position to the benefit of themselves is an un-Bitcoin-like thing. It's outside of the ethos of Bitcoin for them to take advantage of that. They're abusing the fiat system. They're taking advantage of something that their position as a public miner that's not available to private miners and smaller and medium-sized miners is, I don't know, like I said, to me, outside the ethos of Bitcoin. And that's a good segue into core, because I think core is an example of what happens when that gets abused. So a quick history on core. Core went public in January of 2022. And they raised $200 million through that offering, by the way. So they had on their balance sheet at the time they went public a little bit of debt. Forgive me if I'm wrong on the exact number, but I won't be off by any order of magnitude. They may have had like $70 to $100 million of debt at the time. Okay. And were the world's largest mining operation. 11 months later, they were bankrupt. They had blown through $200 million that they had raised in the public offering. And this is the mind-boggling number, their balance sheet now showed $977 million of debt. So in 11 months, they blew through over $1 billion. Now, if you peel back the onion a little bit on that, I guess we'll talk about a couple things. The first one is, traditionally, the process of going public is a pretty exhaustive process. And we may have talked about it in the past, Len. I was part of taking a company public once, back in the 90s. it took us a couple years to prepare our organization to go public.
Mhm.
And again, forgive me if I'm off by a tiny bit, but by the time we went public, we were $1 billion a year in revenue company, generating $100 million in profit.
Was this a Gateway?
This was Gateway.
Yeah. Okay.
So, and that was in 1993, by the way. So adjust that for those dollars. It's about twice in today's dollars. You know, it was double all those numbers. By the late 90s, we were a $10 billion company, you know, generating a little more profit than that. So we had to, by the time we went public, we spent 2 years reconstructing everything in the company to be ready for that. Everything from our procurement processes, our financial tools, our reporting tools, our inventory system, our order management systems, all those sort of things had to be in order. And the due diligence that the financial community and the underwriters put us through was part of creating that readiness, right? Well, a lot of companies today don't want to go through the process, what I would consider to be the right way. They want to accelerate and go fast. Again, a very fiat, high time preference sort of behavior, not a Bitcoin low preference, do it right behavior. So they use different tools. A lot of them use a technique, which it's called a SPAC, but I like to think of it as a reverse merger, where what you do is you find a company that's already public, that's tiny, and it may, by the way, do almost nothing, but it's a public company sitting out there. And then a bigger company comes in and buys it and kind of sucks the bigger operation in, thereby skipping all the process I talked about. That's what Core did. Core took the shortcut. And by their own admission, and you can read their financial statements, for instance, their 10Qs, it's flabbergasting. When you go in and you read their 10Qs, they will say things like, we do not have our financial systems and reporting in order. What we report may not be accurate. Like, they literally say that. Now, it's mind-blowing, by the way, to me, than though that organizations would even invest in this. But I think this is what happens in this euphoria, FOMO sort of thing, where even big institutions, but certainly the consumer, the retail investor, which drives a lot of these stock prices, thinks that a company going public has gone through what I described my company going through. And they think it's maybe been flushed out. They see the headlines. And remember that part of when you go to a show, like if you were going to a computer convention or listening to a podcast or something like that back in that time period, there's a great chance that you saw Core Scientific sponsoring all of these sort of events. They are not doing that to be nice. They are doing that to build a brand and try to build confidence in the people likely to buy their stock, which is the kind, some of them would be the kind of people that would be listening to this podcast. So they weren't ready. So what they did, though, was they started raising debt, massive amounts of debt. And the debt they were raising, by the way, included loans from companies like BlockFi. You can see where this is going to go to, right? So in early 22, they start getting debt from BlockFi. If I remember right, BlockFi was like $80 million or something on that, or at like 13% interest. And there's a whole list of these loans of tens of millions and even hundreds of millions of dollars from a few different places, all in that same rate. But here's the thing. Almost all of that money was being used to go secure servers. Okay. So they're off at Bitmain and or MicroBT placing these orders. They start driving the price of that equipment through the roof. Those of you who might have been in the market in that time period trying to buy a system for yourself. Well, that premium that you paid, you can thank Core Scientific for that. Mm-hmm. Because companies like Bitmain and MicroBT, this is a golf tee. It's not like they're making golf tees and suddenly if the demand for golf tees goes up, that they just work overtime in the factory, right? And therefore the cost or the market price of golf tees doesn't materially rise. Well, there's only so many chips made, and therefore there's only so many systems made. And changing that is something that takes 18 to 24 months and hundreds of millions of dollars to change. So when somebody comes into the market with all of this money, again, Cantillon effect, they disrupt price discovery and capital allocation. So going down a level deeper in the economic piece, right? Capital allocation and price discovery gets ruined, like completely wrecked because of what they were doing. Now, some of the other public miners are doing the same thing, but not to the same degree, right? But they're loading up too. So what does that mean? It means everybody from maybe somebody listening to this podcast that was hoping to get an S19 to run in their garage to medium-sized companies like mine, which maybe wanted to expand in that time period. We couldn't do it. Or if we could do it, we had to pay some ungodly premium for the equipment. Now, here's the other thing. The level of financial irresponsibility is mind-boggling. They did this. They go and acquire, we'll just round up to $1 billion of debt and go and start buying this equipment. They don't have anywhere to plug it in. They have nowhere to put it. Now some of it's on a delayed delivery schedule, but they have nowhere to put this effing stuff. And
you could swear if you want, by the way.
Oh, okay. Well, good. We'll go a little. So these fuckers, they don't know where the hell to put this stuff even. And they were just buying it so you couldn't and I couldn't. That's what that's about. And they're buying it betting that Bitcoin's going to $100,000. Mm-hmm. Extremely, extremely greedy, high time preference behavior. Now, to make matters worse, and this is a beauty in these financial statements, they made the decision to not hedge their position at all. So they made $1 billion bet on equipment that they didn't know where to plug in, and they were betting that Bitcoin was going to 100,000. Then, and by the way, I hate people that short Bitcoin, but then they were so irresponsible from a financial management position, they didn't hedge the possibility that Bitcoin, instead of being at 50 and going to 100, could go to 15. So, obviously, history shows that by the summertime period, they were fucked. Bitcoin goes to 15. They have no hedge. And by the way, the idiots who loaned them the money, like BlockFi, they didn't demand the hedge. Like they didn't demand it. So the levels of just idiocy are mind-boggling. Then, what they did do, though, was they secured it with the value of the mining equipment. Mm-hmm. But guess what? When Bitcoin's at $15,000, it's not worth what it was before. It's worth a shit ton less. So this equipment that they never even got to plug in, now they start getting loans called in, basically, margin call leverage, because they don't have the collateral now against it. So now they have to start turning the equipment over. Now that starts flooding the market back the other way and destroying the value of all the equipment. Now, in this process, one thing I forgot to mention was they had started with about 2,000 Bitcoin in their treasury at the time they went public. They were mining about 1,000 per month. By June, they now started to have to sell everything. They were not only turning the equipment over, but they played a huge role in the suppression of the Bitcoin price all through the second half of 2022. People blame BlockFi and Celsius and Voyager and FTX, rightly so. Those were all crooks and completely incompetent groups. But for some reason, Core Scientific has gotten a pass. And they should be vilified. They're trying to come back. We should not accept them. I'm sorry. I'm a very forgiving person. But I don't welcome them back. I don't think you should either. I don't think people should buy their stock. I'm not giving you financial advice, right? I'm speaking from an emotional level. Like, you shouldn't support people. If you're a Bitcoiner, don't support people that live outside the ethos, that have done things to disrupt the progression of Bitcoin, especially when it wasn't just making an honest mistake. What it was pure greed, an attempt to capitalize on a situation by abusing people like you and me. And they did major damage. It wasn't just the people whose stock price that went down that got hurt. It wasn't just the companies whose loans that didn't get called in that got hurt. It's all of us. Bitcoin was hurt. All of us Bitcoiners were hurt. And as you probably can guess, I'm still pretty freaking pissed about it. So
it certainly impacted your day-to-day business, your mining operation. And a different point of view, as a pleb still trying to stack as many stats as possible, I'm actually happy what they did in terms of wrecking the price of Bitcoin, because of course you mentioned BlockFi, Celsius, a whole bunch of other companies, FTX. It drove down the price of Bitcoin, and Core Scientific is probably guilty as that as well. But from my point of view, I'm kind of thankful that they did, just because I like to stack sats. But that's just my through my own eyes. And another thing that's interesting though too is Silvergate was a big lender to a lot of these mining companies, and NYDIG too. Silvergate did bite the bullet. They took the bullet, didn't bite it. They eventually they were bailed out by the Federal Reserve. But NYDIG, for whatever reason, I'm shocked that they were able to survive all this. As you mentioned, a lot of these companies were borrowing from Silvergate and NYDIG and using the equipment as collateral, as what they're borrowing against. And they were doing so, as you mentioned correctly, when the price of the equipment was significantly higher. And as the price of Bitcoin went down, and so did the price of the equipment. So I'm not sure if you have any information about NYDIG, like what's going on with them, but I have to give them credit here. I thought for sure they would have gone tits up, but they haven't. They're still around. They're still doing business. I don't know why. I mean, do you have anything to share on that one?
I can only speculate like you, that speculate's not even the right word. I can only say I am impressed that they're still standing, that I did not expect it. I'm not positive that they're out of the woods yet. But I am very surprised. And I'll also say, I'll go back to your comment about being able to buy Bitcoin. I get that. I would just phrase it a little differently. I would say that when shit happens, I mean, you have to make lemons out of lemonade. And I still think we all would have been better off if Bitcoin had been able to run its normal course without this fiat Wall Street greed infecting us. And that's what all of that was. All of the above players who were part of that was what that was. But the truth of the matter is, it's probably not the last time it's going to happen. And because I think every time as an industry, if you want to think of Bitcoin as an industry, every time we go through a growth stage, we'll kind of go from one level to another. There's going to be a new batch of those people who come in and try to manipulate it to their advantage. And, it's why I say my company operates within the ethos. And I think there are some other companies that do. We probably operate within the ethos to our detriment when measured in any short window. But I'll also say that I think the reason I survived, and a lot of the companies that did survive through it, was because we were abiding by the rules of being fair and not being greedy and having low time preference. And like I said, I probably could have gone out and begged and borrowed in a literal basis, like found somebody out there to lend us X amount of money at a high interest rate with obnoxious terms, and bought overpriced equipment in the peak of the last FOMO cycle and got wrecked. That's what would have happened, right? So I think the companies that did that either are dead or hurting badly because of it. So regardless of what Bitcoin deals with it, I think there's a way to play it. And who knows like what this year is going to bring. You had said something earlier I wanted to expand, and I think you said basically it was to the effect of this coming year we have the halving and we have the price of Bitcoin kind of fighting against each other. Well, those are two major factors, but they aren't the only one. And I think the other one, which I think I have a passion for talking about, is fees and scarcity. And we talked last time about this a little bit, but halving's going to occur. I've done the math. We're going to average as a block subsidy next year about 4 Bitcoin, just over 4 Bitcoin per block. There's going to be 53,000 blocks next year. We know that. So interestingly, we know as a mining industry, we know a big piece of the revenue equation, which is 53,000 times 4 means, what is that? We're going to be about 212 new Bitcoin issued through the miners. Okay. We know that's going to happen. What we don't know is fees. So even if we're just measuring straight, we don't know fees. We're seeing, again, I think the last time we talked, we were already talking about this issue a bit, but we're seeing again a massive spike in fees. We're seeing block rewards, very commonly well over 7 Bitcoin right now, which means we're in the 1 Bitcoin per block fees, where the historical average is 0.335. So we're running on the order of triple normal fees right now. And that's a huge wild card, right? Because if post halving the subsidy is 3.125, so and instead of 0.335, we get, let's just say 1. That's a big freaking difference in that's a 20% movement in mining revenue, or actually more than a 20% movement, I believe, right about there. It's right about 20%. It'd be a 20% movement in the mining revenue. And by the way, that 20% will be 100% profit. There's the network has a cost of running that won't change, right? So these lifts create massive change. Lift or not lift creates a massive change in the profitability of the mining industry.
Yeah, so the mining fees, they've gone up considerably in the past little while. I took a look today, it's 100 sats per VByte from the last, at least that's as of a few minutes ago. It's incredibly high considering just a few weeks ago we were 1, 2, 3 sats per VByte. So it's a huge jump. So I'm wondering, is this an organic increase, or is there something out there that is spamming the network, or there's something, just a temporary blip in the radar? Have you done enough research to find out what's causing this? Is this something that's going to be sustained, or is this just something that's going to be just like we had the ordinals about 7-8 months ago? It seemed like it came, but it left just as fast as it came. It was like a flash in the pan. So what are your thoughts on this recent increase in the spike in fees?
Well, I can only say it smells of maybe the ordinals folks playing around again, but I can't substantiate that. That maybe we're seeing a blip. However, I think we need to step back a little bit, and I tweeted about this just over the last few days. So the mempool for now approaching like 8 months has been full the whole time. Now it got down close to clearing a month or so ago, but it's been as high as 500,000 transactions in the backlog, and now we're back up in the like 140, 150 range when I checked earlier this afternoon. We're full, and every single block over the last 8 months is stuffed. Mm-hmm. So it's there. There are occasionally an empty block mined. We could talk about why that happens if you ever want, but it's just an anomaly. But basically, all the other blocks, other than the 0.1%, which are empty, they're full. Like they're 4 million weight units, which is the max. So the mempool is full. So I sometimes talk about scarcity this way. I actually tweeted the same thing today. One thing that I always remember about scarcity is that it's a nonlinear equation. And so I can describe it this way. Let's say I have an apple tree. It's the only apple tree in the world. Every day, 100 apples come off of my tree. Now, I'm out there trying to find people to buy my apples, but say only 95 people like my apples. Well, at that point, I'm basically giving them away. I'm throwing 5 away every day, and the other 95 people are getting them for close to nothing. The moment 101 people want apples, the equation changes dramatically, right? Now somebody is not getting an apple today, and the price is going to skyrocket. At the point that there's demand for 120 or 150 or 200, it becomes dramatically different. Now, there are very few things in the world where, as demand increases, supply does not. Block space is one of them. There's nothing you can do in any window of time to change how much the network can process. So if you want a piece of that, you got to fight the other people. I believe what we're seeing right now, and what we saw going back to the spring with ordinals, is that the Bitcoin network has been hovering with block space demand equivalent to the 95 apples in my example. That's our norm. We're sitting there just under this threshold level. And the only reason, and remember, we have a backlog, but there is a second component, which is time, which is how many people have an urgency to have something now versus something to wait. Because if you're doing, let's say, UTXO consolidation, do you really care if it happens today or next Thursday? No. So you put in low fees, right? But if I'm buying something from you, Len, then yeah, it may not be like it has to be now, but it's probably, if I'm buying your car, we don't want to wait till next Thursday. We need it to happen. So I add that into the queue. So my point being that I believe we're sitting at this like equivalent of 95 apples in my example. As soon as ordinals came in, it wasn't that ordinals was so special. What it did was it added the demand for the 6 more apples, and it pushed us over, right? And then what we saw was the model I just discussed, which is scarcity. Scarcity is nonlinear. So it's not like you even said it. You know, we go from 1 sat per V byte to 100 sats per V byte. Like, whoa, that's a big frickin' difference. You know, the mempool isn't that much fuller. It's just a little change in the demand makes a huge difference. Now, the truth of the matter is, this is the capacity of the base layer that we're dealing with this today, and it's full. And there's almost none of us in the world on it, right? We maybe have 0.1% of the world is out there trying to do base layer resolutions. But I use that word too because I consider something like a UTXO consolidation. It's not really a transaction in my world. It's more of like a resolution, but or interaction. But there's 200 million of those, whatever you want to call it. If you want to call it transaction, fine. But there's about 200 million of those that can happen every year. That's it. And we're sitting there where demand is already roughly that level. So if suddenly we go from 0.1% of the world being Bitcoiners to 2% of the world being Bitcoiners, not some hyper Bitcoinization world, just like 2% of the people, I couldn't tell you how big fees would be. Now, I hope Lightning's ready. I hope Fedi's ready. I hope some of these other things are ready because it will push a whole bunch of demand up to there. But base layer, it's a scarce resource.
So then what are the options moving forward? Should people start learning about the alternatives right now? Should people start learning how to not only use Lightning, but learn about self-hosting your own Lightning node? And now the way I understand it, you could do that now with your phones. And there's a lot of software, a lot of work being developed right now that you could simply just have your phone itself be the custodial of your Lightning wallet and everything's like that. So you don't have to rely on a secondary service that you could potentially get rugged. So is that what we should be doing right now? People should be learning about something like Lightning, learning how to use it, because let's be honest, when you're using it, fees are mega cheap. You're talking fractions of a sat sometimes.
Correct.
So is that what people should be doing?
Yeah, it is. No, I think we have to think through. There's actually a whole bunch of things I think people need to learn about and get comfortable with. And I'll say something that on the surface might sound sacrilegious to a lot of Bitcoiners, but I think using and learning about some of those things is probably more important than learning about how to interact with the base layer and your key management and all that sort of stuff. That will be the world that most people live in. And that base layer resolutions are going to be relatively uncommon. They have to be mathematically, right? If there's 8 billion people in the world and 2% of the world adopts Bitcoin, that's 160 million people. Well, that means each person can effectively do one base layer interaction per year on average. That's it. So we'll start with that, right? Get ready for this. Now, where do you want to custody your Bitcoin? Now, I still think for all of your long-term high value stuff, you want to be on the base layer. But it needs to be the stuff that you really aren't going to touch in anything other than an absolute emergency, and you're going to probably hold it for years. And you want to get big UTXOs on the base layer. I had this question asked several times in the last week or so. And I'd say right now, probably 1 million sats is probably the smallest UTXO.
You know what? You just basically answered a question I was going to ask you. So that's what the number that you're saying is the magic amount of sats you should be doing for consolidation, UTXO consolidation. 1 million sats is what you recommend?
Yeah.
So by doing that, now is not the right time to do it, though. You'd have
now. I mean, I guess it's all about now. Like, should you do it tonight? You're probably okay, but there will be a day when it's too late, and the fees. Will fees go down again? Probably. High probability that they go down again. But there will be a day It could be a few months from now. It could be after the halving. But it might not be a lot longer than that when they go up and they don't really ever come down to the levels that we've seen. And another way I've phrased it is, I think, you know how Satoshi used the word subsidy? So we have a block subsidy, right, plus fees. Now, in the early days, there really were no fees. There was only a subsidy. And I think most people think of the word subsidy and they think miners. You're subsidizing the miners. That's not wholly true. The subsidy was for the users too. So the users didn't have to pay the fees. We have, for 15 years, we've had what I call an introductory offer. We've had essentially free access on demand to the world's most secure network and ledger. And that's a luxury. And I view it as, like I said, an introductory offer. What Satoshi did was allowed, through the subsidy, has allowed a group of us, started with a couple people. I wasn't there then, but I'm in it now, to bootstrap this whole thing, to become the early adopters. He was subsidizing us to go through that process. I believe it's over. And we're now measuring in maybe days, weeks, months, how much longer that's going to take place. Now, if you think about it, maybe with the subsidy having again and becoming, it's now will be about 6% of what it was at the beginning, maybe it makes sense that the introductory period is about over, right? That the subsidy is going away. The fees must start pulling their weight to support this. And those of us who use it, it's like, you go to a health club and you get the first 60 days for free. Well, there's a point at which you got to start paying, right? And it's like that, right? We're at the end of the introductory period. Now we got to start paying, and we should be happy that that's the case. But I think what's happened is, I think there's been a mindset in the community, and I understand why, but the mantras of like, not your keys, not your Bitcoin. Well, it's true. I get it. I support it. But it's not practical for everybody. And in a hyper Bitcoinization, it's impossible. You can't have 8 billion people hold their own keys. You can't even have a couple 100 million people really hold their own keys and regularly interact. We're going to need custodial solutions at higher levels that people can trust. We're going to need Lightning. We're going to need Arc. We're going to need Fedi. I hope they all make it. I hope something else comes out too that's another layer 2 or layer 3 that people can get comfortable with, because it's the only way that Bitcoin works.
The beautiful thing about it, not just the fees, but the stuff that we use, it's all capitalism at its finest. Because the fees, it's not driven by something that's manipulating it. It's simply just demand. And the more demand there is, the higher the fees go up. The less demand there is, the lower the fees go down. And the same applies to the layers, the layer 2 solutions that we tend to gravitate towards and use. Like if it's Lightning, if it's Arc, if it's whatever, people would use it if it works. If it works for them, they like it, it's easy to use, there's no resistance. And so that's another capitalist type system where people are going to vote with their wallet, or vote with their Bitcoin, vote with their time, vote how they download stuff and use it. So that I absolutely love that. There's no external pressure trying to push people a certain direction. But I still believe, though, that there's a large number of people that still, they have the ability, and they probably will want to hold their own keys. Maybe I'm different mindset. But the reason is, I think people, after what's going to happen in the next little while, the traditional financial system, the monetary system, as it collapses, people are no longer going to have trust in third parties, in the banks or a central bank or anything
Yeah.
along those lines. They're going to want to have control of their of their financial destiny, and to do that, holding onto your keys is probably going to be the best course of action. Now, granted, not everybody's going to choose this because of the technical ability or because of laziness, or maybe a combination of this or something even I'm not even considering. But I still think that there's going to be a large number of people that want to do it, especially people that understand the value of Bitcoin, that they also have the ability to invest to do it. People of means, that they're able to right now transfer their wealth, their fiat wealth, into Bitcoin wealth. And they'll understand, I don't want to just leave this for somebody else to take care of it. I want to control it myself. Maybe they remember it, or maybe they figure out a way to. I'm not, a number of different ways. But I'm of the belief of that you're going to have a large number of people, smart, competent, and people that understand the system. They're going to own their own keys.
Yeah, I agree with you. And like I said, I think sometimes people take what I say as almost sacrilegious. It's not a belief in something other than not your keys, not your coin. It's the mathematics behind it. So that I agree with you completely that there will be lots of demand for it, but therefore you're going to have to pay for it.
Yes.
And so, and there's a whole bunch of behavioral changes. I'll give you an example. So, I mean, here in the US, for instance, I assume you have it in Canada. You have a couple different platforms that allow you to DCA, right? So, I mean, for instance, Swan here in the US, or DCA, right?
Yeah.
Now, if you're buying $10 of Bitcoin every day, and then you've set up some auto withdrawal to cold storage, now is a hell of a time to go look and see what you have. Because you might say, you may have been doing that for a couple years and go, oh, look, I have a Bitcoin. Well, it kind of be like saying, hey, I have $1 million, but it's all in pennies. And I don't think anybody will allow me to spend my 1,000,000 pennies. So
that's a really good point. UTXO management, in that respect, that's a very good way of framing it. Like, yeah, 100% agree. And I can even go a little bit further. I think that on chain, if you don't have a certain amount of Bitcoin, regardless of UTXO management or not, I think as fees spike up, there's going to be no point to even. I mean, maybe that's not the right word, but it's going to be very difficult to stomach transacting on chain if you say only have a couple 100,000 sats associated with you, because then just one transaction, you may not have enough even to pay for that. So I think that on-chain transaction is probably going to be reserved for the people of means, people that have significant amount of Bitcoins. And significant, I'm not going to give a number. It could be anything, but just enough to more than cover the network fees without really draining whatever it is you have in your stash. So I think that's what's going to happen moving forward.
Yeah, and for anybody that's not familiar with it, there's a concept called dust, and the concept of dust is if you have a UTXO sitting on the base layer, let's say you have 1,000 sats sitting in a UTXO. Well, if you've got 100 sats per VByte transaction fees, do you really want to move that 1,000 sat UTXO? I don't think so, right? Now, so there's dust in a literal sense. Like now, if we're at 1,000 sats per VByte, you can't even move it. It's so that's dust. The 1,000 sats exists there, but it's essentially the equivalent of losing your keys on that, because it's no longer spendable. It's not, if we're in a sustained environment at that level. But even at a level where it's not 100% of that value, are you going to give up 10%, 20% of the value of that UTXO to move it? But it's like I said, I gave that example earlier. I don't know if you've ever had like a big jar that you put all your coins in. And people don't use cash as much obviously anymore, but I used to do this a lot. I'd come home every day and all the coins in my pocket would go into a thing. And then like once a year I would go truck this big heavy thing over to some place and they would count it. And they might take like 10% just to count it. Like you dump it into a machine and then they count it. Sometimes your bank could do it for free if you had a bank, but there's a lot of third parties that do it. It's kind of like that. Like, so, which by the way, it's kind of one of the things nobody talks about. If the community does not properly manage its UTXOs over the next couple of years, let's say, and get their shit together and get all that stuff cleaned up, we may end up with an additional couple percent of the 21 million that's effectively dust that is worthless.
I was just going to say that. Yeah. It's just another donation that's going to be added to us, and the scarcity will just go up another notch. Yep. Now we've been at this for over an hour, and I don't want to keep you too much longer. But somebody had a question at the very beginning of the show. I never had a chance to get to it, but a couple of them, and this is with respect to Barefoot Money. Bob, do you tune any of your units to increase their hashing? That's number one question he had. The second is, what machines did you upgrade with?
Okay. First, as far as tuning, we do a little bit. We're using products from both Luxor and Brains to do some of that, but we don't do a ton of it, to be honest. So part of it comes down to and by the way, a question that wasn't asked, but maybe that's ancillary is, do we overclock? And we rarely overclock. We will occasionally underclock, but not for, the only reason we underclock is usually just a thermal management issue. Like we had a few days this year where maybe the temperature, we do almost all mining outside, right, in containers. And so this year we had an unusual run of temperatures like in the 38 and higher degree weather. And so that causes some problems. We essentially never turned off. I'm really proud of my team and the operation that we have. We never turned off, but we did have to take some percentage of the units, shove them into low power mode for some thermal management issues. We don't overclock primarily because number one, we believe that outside of tweaking a couple percent, that we do long-term damage to the units, and that we can crank a little more out, but also because if I have a given site and let's say we have a megawatt of energy available at a given site, I've already filled it up to the max. So I can't overclock because I don't have any additional energy to suck off of to do the overclocking, even if I wanted, right? So now some people at home, when you have a home miner, you may find, it makes sense. Hey, fees are really high right now or something like that. I'm going to overclock for a little bit while this situation is there. But you always have some overhead in that situation. Those people would have overhead to play with. I don't have that. I've already maxed out because I want to run 24/7 balls to the walls, what I have, right? Now, what machines do we upgrade with? Primarily, we did with like the one we're doing right now is the S19K Pro.
That's new. That just came out a couple of months ago.
So basically everything we've done since the end of August has been that unit. It's a fantastic value. And that's been kind of our number one. We've had a few select situations where we've done some work with the XPs. And then last spring, we were doing a lot of the S19J Pro Pluses, like 120s. So the most popular unit in our fleet, though, by the time we hit the halving, by far, we will have the S19K Pro at 120 will be the kind of the flagship unit across our fleet. Like I said, really good value, high efficiency, very confident that those units will have life, at least for us with our energy costs, through the next epoch, that we get 3-4 years of, very profitable mining out of those.
So what's the ROI that you have estimated right now out of that before it turns to be profitable?
I mean, how long does it take to recover?
Yeah.
Cost?
Is that, I'm not sure what the price is. I'm not sure if you're getting a deal or anything, if you're getting it in bulk. This is something you may not even want to divulge. But I'm curious, what are you anticipating based on your power generation, how much it costs to pay for your energy, another overhead, and how long will it take before you're profitable with one of those units?
Well, I have to answer it a little differently than you're asking, just because when we invest, it's not just servers, right? So we're buying containers, we're buying transformers, we're buying switches, we're buying disconnects. We got to buy all this stuff. Now that infrastructure piece, like I'll give you an example. I have as we speak, it'll be lit up in a few days. I have a smaller site. It's a 0.5 megawatt site. Okay. And I've got about 40% of the money of bringing that up was infrastructure. And about 60% of the money to bring that up was the servers. Now, if so now there's a whole bunch of ifs, right? So if Bitcoin ends next year, so this will be an operation going up in November of 2023. If Bitcoin by the end of next year is in that mid to high 50s, if something doesn't happen where fees go the opposite direction of what we talked about, right? If they stay flat or go up from the norm, and I haven't been grossly off on my global hash rate predictions, then we should have got all our money back by the end of next year.
That's fantastic. And you're giving very reasonable expectations in terms of the price of Bitcoin, in terms of the fees, the network fees that you're anticipating. These are not astronomical numbers. These are definitely within the realm of possibility. So that's amazing. Have you delved into any of the new generation stuff, the S21s and then the new What's miners that have been released? Have you looked at them?
We've ordered a few just to play with. But you know what you find is actually Steve Barber, who's a buddy of mine, he just had a great tweet on this too, and that I supported. And he said, the best value is almost always one step back from that stuff, which by the way, it would be the S19K or maybe like an M50S plus. MicroBT always says that. These companies really need to work on their model numbering systems. But that's typically the sweet spot that you overpay. But it's interesting. Even going back to my gateway days, for those of you who don't remember, I came from the personal computer world. And if there was a new chip out from Intel or a new graphics chip from NVIDIA, let's say, there would be some massive premium to acquire that. And if what you did is you step back one from that, suddenly the value equation changed tremendously. Now, some people want to have the latest and the fastest, and that's wonderful. But when you run the equations, when you run the ROIs, it's often not as good.
Yeah.
You're buying a little insurance on the long run, right? So you're buying some insurance that unit's going to last longer. It is. But the delta in the raw price or price per terahash, it's hard to justify.
Any thoughts on aftermarket, secondhand equipment? Is it you always buying new, or do you even give a consideration for something that's secondhand?
We've never bought secondhand. As a commercial miner, it is. I would never say never, because there could be like a liquidation event from let's say something. I don't wish ill on anybody, even though well, maybe core scientific a little bit,
I was gonna say something like that.
but no, that's not the right thing to do. I still don't wish ill on anybody, but I don't think they should be praised. I think they should be vilified, and I don't think. And you should think about them the same way you think about, let's say, a BlockFi or a Celsius or a Voyager. But that said, let's say somebody goes belly up, and there's some S19J Pro Pluses out there that had been managed professionally, and I could go inspect the facility. I could see that they had been operated properly. I could look at the logs. If the price was right, I would probably be open to buying those. It's how well a unit has been managed, what facility it was in. Was it overclocked? Like, were they pushing the edge for a long time? Has this been like basic maintenance of just blowing dust out and like those sort of, has that been done on a regular basis? Kind of like buying a used car, right? You if you go buy a used car from this old lady who she's got a 2006 Toyota Tercel, and she had it for 18 years, and she hands you a book that shows you the exact date of every oil change and a list of like all the times the tires were replaced and rotated and the radiator flush and like all those sort of things. And it looks great. You go, well, maybe I'd buy that thing, right? On the other hand, you go to, Jim Bob's car dealership, and you see the same, 2005 Tercel. And now you're wondering, hey, has the mileage been rolled back? What's the history of this thing? I know they sent it through like a car detailer, right? So it looks pretty good, but what's the real history of this thing? So it's kind of the same thing here. So I'd just, be cautious.
Yeah. Are you able to check out like just visually or even through an advanced inspection to see how much it's been used, or are you strictly going based off logbooks, based off their word? Because with a car, you could do an inspection, you could run a compression test, you could do an oil analysis, you could do so many different things to check out the health of the car. But when you're talking about an electronic device like an ASIC, do you have the ability to check it out to see if it's been overclocked, how many hours has it been overclocked, what type of conditions it's been used? Is there any way to determine it, or is it strictly just based off the word from the seller?
Hopefully, like I said, if I was buying from the type of organization that I talked about, I would assume that they're using some sort of professional management software, like a Foreman, that I can go into Foreman. I can see all kinds of things about the history of the unit. I can see if alerts were sent out relative to that unit. I'm not saying we're going to check every single one, but I also would be able to look at the facility itself and say, do you have full-time technicians? Are somebody here all the time? Do you have a regular like we have very regular processes, that on all of our containers, filters get inspected on a regular basis, like daily. Somebody looks at the filters visually every day. No matter what, they get washed and cleaned or replaced on a certain schedule. We have those sort of activities that are occurring even at the container level, and then we have similar things happening at the unit level, where we have a team of guys, and they're really good and they're very disciplined, and they go off and they do that stuff. So if I walked into an organization and I saw that they had those things, I would have reasonable confidence that they were doing it right. Now, the one thing is, though, if they were doing all that stuff right, then I'm not sure why they were going out of business. But
That's a different argument.
Yeah.
So no, Bob, we've been at this for actually a little bit longer than I originally booked, so I want to appreciate you coming on and talking about so many different things related to Bitcoin. Plus, you're under the weather, so this has been probably a little bit more of a challenge than normal for you. So I just want to thank you very much. And before we sign off, I just want to hand the baton over to you and maybe just pump your product. Old Man Yells. You can pump the Barefoot Mining. The floor is yours. Where people find you? Talk about whatever you want. Maybe even the Wisconsin Badgers. Go ahead.
Thanks, Len. All right. Well, my company's Barefoot Mining. We're somewhat unique in the way we manage our business in that while we do a small amount of hosting, if somebody's out there and they're looking for really a white glove type hosting service, we do still have some very limited availability out there. But our primary business is, as I said, is working to develop new sites. And so we will work with individual investors typically. We'll spec a site. Maybe we're raising $500,000, maybe we're raising $2 million, whatever. We create a unique company around every site. Barefoot manages it. We take some ownership in it. We often put some money in as well. We bring in the investors and we, operate that as a team. And we don't hodl Bitcoin. I don't believe in doing that either. We send the Bitcoin to the investors every month. So whatever the profit of the company is, it goes out. Another reason I don't think public miners. I don't like that business model. I think
that's fair.
I think we want money in the hands of the plebs, right? That's where it's safest.
What's going on with Old Man Yells? You didn't mention anything about that.
So I started a show. It was probably, I don't remember. It was last summer, so I may have only done an episode or two by the time we talked last time. But I started a show. I think I just did episode 13 yesterday. And if you're not already bored to tears listening to me, you can go there. It's a monologue show. It's just me ripping from 15 to 30 minutes on a given topic. I did one on Core Scientific. I did a 3-part series on the public miners a little ago. I put one or two out every month, and it's just kind of me sitting here ripping on something. And I just started a series, last night on mining pools. So I'm going to it'll probably be a 4-part series. The first part was last night, which really focused on why do pools exist? Why doesn't everybody just solo mine? Why do pools exist? What's the value of them in the infrastructure? And we're going to build, I actually have an announcement we'll be making at the end of the month that I will also make on the Old Man Yells show. I can only say that it pertains to the mining pool world.
Yeah, and I could speculate, but I don't want to say anything more because I don't want to burst the bubble just in case I get it. And yeah, this is going to be good because, well, I don't want to say too much more about that. Any last, say anything else about the Wisconsin Badgers? I see you're wearing the shirt. I'm not sure if you're a fan of them or anything.
Yeah. I was born and raised in Wisconsin, and the accent that you hear is not Canadian; it's Wisconsin. Although I'm sometimes thought of as a Canadian, so we share a lot of similarities. Football season has been a rough one. It's not our year, but I have high hopes for basketball. So,
are you a cheesehead? I
am a cheesehead. Yeah.
Yeah. So absolutely. I'm not sure how the Packers are doing this year.
Packers it's not our year either. But I've had a great run. I mean, I had 30 years I've had almost 60 years of being a Packer fan, but the last 30 have been glorious. So I'm not going to complain about a couple years where we're kind of down. And I'm a Milwaukee Bucks fan, so we're in really good shape there. So I've been blessed that my teams have done for the most part pretty well.
Yeah, between Aaron Rodgers, for football, and Brett Favre. Oh, can't forget about Don Bukowski. He's the Magic man.
Wow, there you go.
So, they had a run of great quarterbacks for the past 30 plus years, or a little longer than that. Anyways,
yeah.
But Bob, thanks so much for coming on the show. We should just wrap things up at this moment. And thank you very much if you are still paying attention, still on the show, listening in or watching in. We'll be back at this on Monday. Hopefully I'm feeling better by then. If not, we'll still keep slugging away. So, Bob, thanks so much for coming on, buddy.
Thank you. Thank you, Len.